Japan's not doing too hot these days. Their currency is collapsing, and at the same time, they're experiencing a record spike in their trade deficit. Now, for Japan, this is a big deal. It's not like the United States, where a trade deficit is just the norm and what we expect to always have every single year for decades and decades. No, in Japan, they usually have a trade surplus. So the fact that their currency is collapsing, as well as almost failing in their bond market by trying to peg their government bond rates in a range, their yield curve control, with that also failing, and now their trade deficit spiraling out of control, Japan is not looking too good these days. Ready? Let's dive in. Take a look at this chart of the Japanese yen as measured by United States dollars. You can see over the last year, it has significantly declined, especially compared to its long-term trend here. The long-term trend, this yen was moving up versus the dollar, and early in 2021 broke that trend, has been falling extremely quickly since then. Keep in mind, this is a long-term chart, goes back to 1987. This has been putting a lot of pressure on their economy, but also on things like the United States treasuries, because typically Japan, they've been a big buyer of US treasuries, especially in times of stress. And so they haven't been able to do that because their own currency is falling off a cliff. And so if they're going to loan money to the United States government, then that's going to put even more stress on their own currency. And so they're not able to do that right now. All of these problems we can see, they're all interconnected. And if one big node fails, it can trickle over and cause major problems to all of the rest of the nodes in the entire system. This is no exception. Looking back at their history, we can see this chart from Trading Economics that goes back to the 60s. This is the Japanese trade surplus or deficit. So we can see right here in the middle, this zero line. So if the chart is above that zero line, that means they have a trade surplus. If the blue line is below zero, that means they have a trade deficit. Trade surpluses and deficits are different than budget surpluses and deficits. Budget refers to the government gets in taxes and then spends money. If they spend more than what they brought in from taxes, they have to borrow. That's a budget deficit. If they spend less and they have some left over, that's a surplus. A trade deficit or surplus is very different. It refers to how much the country on net is selling to other countries versus buying from other countries. Exports versus imports. Japan is usually in a trade surplus. As you can see from this chart, normally for long periods of time, Japan is in a trade surplus. Now, ever since about 2005, they've not been doing as well as they were from the 80s through the early 2000s, but they've still been able to, a lot of the times, hit a trade surplus. That has not been true lately. If we take a look at just the past 5 years, we can see that recently they've started to fall off a cliff, and their trade deficit is now at a record high. They have never had a trade deficit this extreme before. As you might expect, energy is playing a big part in this. We can see that imports rose about 50% from a year ago, which was a record, led by crude oil, coal, and liquid natural gas. Exports only increased about half that rate. This isn't helped by the fact that exports appear to be slowing down right now compared to last month, which is suggesting a slowdown in their growth. Now, their weaker currency should be contributing to helping their exports, but they haven't gotten as big of a bump as they would have expected, largely because economies all around the world are hurting as well. This just goes to show that you cannot violate the laws of money forever without experiencing the consequences. And Japan has been engaging in reckless monetary policy for decades, and they thought they were fine, and now it's time to pay the piper, and the consequences are now starting to become apparent. And with how interconnected everything is, this could be the start of many major countries and many major economies starting to experience the consequences of their decades of irresponsible and reckless monetary and fiscal policy. Japan is not the exception here. They are the rule. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.